I recently did a video on the One Big Beautiful Bill where I briefly talked about the no tax on tips, no tax on overtime, no tax on car loan interest, and the new deduction for seniors. But since the passage of that bill, the IRS has issued a fact sheet with more details on each of these deductions for Americans, and I'm going to include a link to that fact sheet below. So while my video I did on the bill had a lot of views, it also raised a lot of questions from viewers about those deductions. So what I'm going to do in today's video is answer some of those questions that relate to the senior deduction. I also did a few other videos where I answer frequently asked questions about the no tax on tips, no tax on overtime pay, and the no tax on car loan interest. So the first question is, what is the new senior deduction? And essentially the new bill introduces a temporary additional deduction for individuals ages 65 and older, and this is often referred to as a bonus deduction for seniors. So how much is this new bonus deduction? If you're eligible, age 65 or older, then you get an additional $6,000 deduction on your tax return. And if you're married filing jointly, each spouse who's 65 or older can get a combined deduction of $12,000, so $6,000 each. The next question is, when does this deduction actually go into effect and how long does it last? So this new senior deduction goes into effect for the tax years 2025 until 2028, so it's a temporary deduction. The next question is this in addition to the standard deduction for seniors or is it replace it? And the answer is this is in addition to the standard deduction of the $6,000 that it's already available for ages 65 or older. Another question I received is, do I need to itemize to be able to claim this deduction as a senior deduction? And the answer is no, you don't need to itemize to be able to take advantage of this deduction. This new deduction is available regardless of whether you itemize your deductions or if you take the standard deduction. And if you itemize, you can simply just add this new deduction on top of your itemized deductions. Now, what if one spouse is 65 and the other spouse is 60? How much of a deduction can you take? Well, if one spouse is 65 and the other is 60, the deduction only works as follows. Only the spouse who's age 65 or older at the end of the tax year qualifies for that $6,000 deduction. Therefore, the couple would only be eligible for the $6,000 senior deduction. And the rationale is that the deduction is only eligible per individual. So even if you're filing jointly, if only one spouse meets the requirement, then they can only claim that deduction for that one spouse. The next question is, are there income limitations for this deduction? And the answer is yes. The deduction phases out for high income earners. For single filers, the full $6,000 deduction is available if your modified adjusted gross income is up to $75,000. Now, the deduction begins to phase out if your income goes above that and completely phases out over $175,000. If you're married filing jointly, the full $12,000 deduction is available if your modified adjusted gross income is less than $150,000 and completely phases out at $250,000. And then lastly, the deduction is reduced 6 cents for every dollar your modified adjusted gross income exceeds that of applicable threshold. The next question is, does the deduction eliminate tax on Social Security benefits? And unfortunately, the answer is no. While Social Security benefits are still taxable, this new benefit, basically this new bonus deduction, helps seniors a little bit by giving them an additional tax deduction. So again, who is eligible for this deduction? You have to be at least 65 years or older on the last day of the year to be able to qualify. And both you and your spouse have to be at least 65 for both of you to qualify. Hey, if I didn't answer your question in this video about the new senior deduction, include a comment below and I'll try to answer it directly, or I'll do a completely separate video on it.